Hey, welcome to the Mortgage Minute for Friday, July 22nd. Well, here we are, the dog days of summer. Lots of interesting stuff. Obviously, what's on the minds of most people are three things. Number one, interest rates in Canada. Number two, the debt crisis in Europe. And, of course, what's the Americans going to do with their debt ceiling? So how does this all relate to you and your mortgage? Well, let's look at a couple of headlines. First of all, last week when the Bank of Canada decided, as expected, they would not do anything with interest rates this summer, one article came out saying that the debt limit ought to worry Canadians. And they're talking about the debt limit in the United States, and this could have an impact on Canada. The U.S. Treasury Secretary said that failure to raise the debt limit would have catastrophic consequences for the U.S. economy. Catastrophic consequences for the U.S. economy isn't great for Canada's economy. That means, again, it would be difficult for the Bank of Canada to raise interest rates. The same day, a different article came out that says the Bank of Canada rate to double by the end of the first quarter of 2012. So, again, on one hand, they're saying that rates are going to double, but another report said the bank maintained that the view that the Canadian economy would not even return to full capacity until the middle of 2012. These are conflicting reports, and what it really translates to is that nobody really knows. And the point is that there's so much going on in the world. We do know that gold is rising to record heights. Why? Because when people are afraid and the world's in turmoil and chaos, they seek safer harbors. Speaking of which, look at this. Bond buyers flock to Canada. Talking about safe harbor, I wonder if, with all this world chaos, what we have in Europe and the United States and uncertainty, you might find more international buyers coming into Canada. We've seen in Vancouver with the Chinese buyers. Look for more of that in not only gold, but real estate. And the Canadian real estate is seen as one of the safer bets. Another thing that's going to put a lid on interest rates is Loonie soars to record heights again. I mean, I'm heading out of town here, going to the States. I love the fact the Canadian dollar is over $1.05, but I know that's not great for the manufacturing sectors. Here's something that's interesting. Here's a title you'll never see in the United States: BC deficit slashed as economy grows. So this again talks about how domestically, Canada's doing quite well. We have a lot of strength domestically, but then all you have to do is look south of the border. It says, end of the debt ceiling deadlock, Bernanke warns amid rising alarm. On what not raising the ceiling would do, it would create a very severe financial shock that would have effects not only in the U.S. economy, but on the global economy as well. So, and while all this is going on, Greece is getting bailed out. That's a deal sealed for Greece bailout. I tell you what, folks, I don't care what you read about. I'm personally not buying. I don't think the solution in Greece is going to be a long-term solution. I think it's a house of cards they're building there. So look for ongoing issues in Greece. The Americans look like they're going to figure out their act and get the Republicans and Democrats going to come together and solve their debt ceiling issue. All this translates to Mark Carney meeting again in October. We'll talk between now and then, and I'll let you know what my thoughts are. Right now, it looks like the Bank of Canada will raise rates by a quarter point in October, but my guess is I wouldn't be surprised if they don't, simply because high Canadian dollar and ongoing issues globally. So for now, take advantage of these low rates to pay down your debt, and have a great summer. Thanks.